Hello guys, welcome back to another Linktree trading video. In this one we're going to be doing some in-depth stock analysis on Moderna, ticker MRNA. The reason for this is it's one of the bigger gap downs of today, and also it's usually one a lot of people want to know where it's heading, so it just makes sense to be doing some analysis on this. So to start off, we'll start off on the daily chart so we can see is there any gaps that need to be filled, because more likely than not gaps get filled. So we don't tend to use them for entries, but they are a good level to keep an eye on for at least profit targets. So we still have the gap filled to be filled at around 185. So if we're looking for an upside target, that's where we can consider. And now we do have a lot of messy gaps here. And this is something I do tend to ignore when we see, because there's too many to really kind of consider. I guess you can consider the peaks of each of these. So, you know, the 306, 286, they're really the only two I may consider. The other ones, they just vary kind of all over the place. So those are really the only two, I guess 271 as well, that we're really going to pay attention to for the time being. Actually, we'll get rid of that one. So yeah, 271, 306 and 385 are the only gaps we're really going to be paying attention to from a profit target standpoint. Now what we will see, now coming on to the standard deviation charts, is that Moderna's already come to its first deviation and now broken through. We did do a previous analysis on this, saying that this was going to be our long zone, which we did play initially. I think it was, don't know, it might have been this pullback here, this move here, which ended up moving, you know, I think it was like a 10% or 20% move. Yeah, sorry, a 10% move. So that bounce has already played out. Now, once we hit that initial level, the only time we retrade it is if it comes back to a statistical mean. And in this case, it didn't able to bounce to a statistical mean, didn't even make it to the half deviation. So when we see that, we then know it's most likely going to continue down to that next deviation, and that's what we'll look to trade. So that's exactly what we did. We're kind of waiting now, and now we're waiting for this 194 and 173 deviation levels as our long targets. So really on Moderna, we're not really going to be touching it long at all until it can push down to kind of this $200 level, kind of break that to the 194 to 173. May get a small size at the actual $200 level, just because that will be a strong psychological level. So we could get that bounce a bit earlier just on that 200. So just to make sure we do get in the trade, we may take a small size then, but the majority of size will be at the 194 and the 173. Now when we're in this trade, where would we be looking for profit targets? Well, right off the bat, we have this 277, which will be that gap fill. And what we can see quite nicely is that it lines up firstly with the first deviation on the 4 hour, or very closely to, and lines up literally dead on with the daily first deviation. So here, we will definitely be locking in some profits here. Reason for that is, firstly, that's a lot of upside. I mean, if we go to the closest deviation to the other closest one, that's a 40% upside. So no matter what, we're gonna lock in profits there, because it's too much to be up to not really lock in anything. So yeah, we will definitely be locking in profits in from that move there. But we can hold some size, and we would be looking for that higher up target. And again, you will see these gap fills line up with statistical mean. At 385 or 387, we have the gap fill and also statistical mean. This is where we will lock in if we have any of the position left, this will be our final target, and our final target will be this 178. Reason for that is we don't want to hold through or pass a statistical mean, just because then we're taking on unnecessary risk. When we're looking at a stock, for example Moderna, if we get long at 195, we know it's more likely than not going to go up, because stocks try to reverse to their statistical mean. So we know, okay, it's most likely going to bounce and try and push that $300 level or $380 level. However, if we if we buy, or if we're holding at this 179 level, 379 level, then we don't really have any direction. It's already at its mean, so now it will try and push away from this mean, but we don't know which way it could go up, could go down. So when it comes to this point, you're more of gambling, unless you're holding for a long-term reason. If you're just swing trading and or day trading, it doesn't really make sense to be holding past there, because you'll be in the trade so long that there'll most likely be a better trade to be taking elsewhere anyway. So yeah, looking to get long, the 195, 173 will average in at both of those areas if it pushes down further. we will definitely be looking in some at this 277 and 290 because that's the first deviation, and we may hold some to statistical mean. The one thing as well we do want to take into account is obviously if we're getting long at this 194 level, all the move back to statistical mean is 100%. So that is one thing that does put me off with this trade holding statistical mean, and why if we do hold any to that level, it will be a small amount. And that's just because the reason Moderna's deviations are so far apart is because of all the movement it's had previously. We don't expect it to be just, or we don't expect it to be pushing to an all-time high, or not at least in the near future. So it doesn't really be making as much sense to hold the whole way. Whereas what is a lot more likely as we come to the 195, comes back to retest kind of this $300 level, which would be the first deviation, then we would really expect Moderna to continue down because it does seem just to be a bit overhyped at the moment. So that's why we'll be looking in the majority kind of around that $300 level. We will most likely as well, and you can use the half deviations on this trade, as it's something we do look for on trades when there's so much upside, in this case 40% to the next deviation. We do want to be looking in some profits before, just because, or at least an area to move stop. For example, we've got the 222 and the 240 as kind of levels where the half deviations are. We will be locking in some profits here, but whether you want to or not, that's always up to you, even if you're using these levels. But they could be at least a good indication to maybe move your stop, so you're not then going to be taking on a loss on a trade, which is kind of unnecessary. So really, those are the key targets that we're paying attention to. Longs at the 195 and the 173. Most likely lock in some profits coming into the 222 and the 240. And then if we are holding further, then the 277, the 290. And on the very extreme, where I personally won't be holding to, or most likely won't be holding to, but can be your kind of final target, is around that 275 area. So I hope you enjoyed the breakdown on Moderna. Hope to see you in the next one, and that's it. Peace.